Welcome, everybody. We are from Stone Ridge Partners, and welcome to our learning series. Today, I'm joined by my partner, Joe Lynch. Stone Ridge Partners is an M&A advisory firm working in the home care, home health, hospice, and behavioral health segments of healthcare. Today, Joe and I are going to have a conversation and walk people through the process of M&A, mergers and acquisitions, what's changed, what hasn't changed, and things to look out for. So with that, let me introduce you. Well, first of all, I'm Rich Tinsley. I'm the CEO and partner with Joe at Stone Ridge. Joe is one of our operating partners, as well as he was and I'll let him tell more about himself, but he was a entrepreneur and he owned his own company for 20 years. So, Joe, welcome. And how are you doing today?
Good. Thanks, Rich. Appreciate you being here. Yeah, you want a little background,
Sure,
just
yeah.
so that the folks know? So I started out in the home care business in 1990, working for a very large hospital corporation. It was called Orenda. Orenda eventually merged with Tenet, but until that happened, I was on the road a lot. I started hospital-based agencies with their existing assets throughout the country, traveled a lot. It was a lot of fun. Eventually, I met the woman that I wanted to be my wife, and suddenly the travel wasn't as much fun. So at that point, I had started and managed a lot of home care operations, all hospital-based. I decided to step out on my own, so I started one from scratch. It started out as home care, private pay here in Dallas, where I'm from. Eventually added in Medicare home health, acquired a couple of companies along the way, grew it organically, and then eventually ended up selling it to Humana in 2014, using Stone Ridge to complete the process. Don Cummins was my advisor, our founder, and a few weeks after I left there, he called me and asked me to join the team. And it's a funny story because at the time that happened, I was talking to my wife, and she said, "Do you want to do that?" And I said, "Well, gosh, I don't know if I know what to do." And she said, "You've done it you've been doing it consistently for 17 years. Why would you not know what to do?" And I kind of had a realization. Sometimes it's the one closest to you that sort of smack you upside the head and make you realize things. Anyway, I did join the team. A year later, Don retired. You know the rest. We became partners with our other two partners, and also in Louisville and one in Tucson, Arizona. And I've loved it. It's been great. It's been a lot of fun, and we've had a lot of success.
Great. So let's move into the M&A process and our role, what Stone Ridge Partners does. So talk about what people should be looking for when they things they should be thinking about when they're thinking about buying something or selling something, the role that we play. Just kind of walk you through. I mean, you've done this a million times, but kind of walk us through what somebody should be thinking about in what the process looks like, soup to nuts, beginning to end, and our role, how we help them.
So from the beginning, I get asked a lot what people should do if they're thinking about selling, and a lot of this is pretty common sense, but I can't tell you how many times people have called and said, "I want to sell my company." And I say, "Great, do you have good financials?" And they say, "Well, I have a tax return." And there's nothing wrong with having a tax return, but that's not organized financials. The analogy that I give those folks is if I was trying to sell you a used car, and I told you it had 5,000 miles on it, even though it was 10 years old, you'd be excited about that. Then when you get in it, there's no odometer. And then there's me standing there saying, "Just trust me, it's got 5,000 miles. Would you buy that car?" And the answer is obviously no, you would not. And it's the same thing with these companies. The financials are the documents that tell the story that the buyers want to see. So that's step one. You have to have organized financials before you're going to list your company. To a lot of people looking at this, they might be hunching their shoulders saying, "Well, duh. I mean, of course you do." And I'm not really speaking to those folks. If you understand that, and if you have good buttoned-up financials, then to me, that's probably 75 or 80% of the process.
And Joe, that's
obvious.
that's an issue too, regardless of size, right? I mean, we have companies that have great financials that have 800,000, $1 million in revenue. That we also have companies that have 30, $40 million in revenue, and their financials are less than adequate. So it's almost your point is people probably hear that and they think about small companies, but it's the professional financials that are accurate are important regardless of the size of the company, and we see it at all sizes having what I would say are inadequate financial statements that represent their company. So,
yeah, absolutely. And you know, when we talk about financial statements, a lot of people extrapolate out and say, well, gosh, I need fully reviewed or audited financials. And that's not what I'm talking about. I'm just talking about good, organized financials that accurately depict the performance of your company. If you get under, I'm jumping ahead here for a second, but if you get into an LOI with the company, they will do a full audit of your financials. It's called a quality of earnings report. And if that stumps us a lot when the buyer comes back and goes, okay, well, here's what we found, and you were reporting $1 million of EBITDA, and we're finding it to be 700,000 of EBITDA. Well, when you take that 300,000 and pull it out of the multiple, that's a lot of money, and more than a few deals have blown up as a result of that. So it's just important that you have organized financials that tell the story and that are as accurate as they can be. The other parts of this are quite obviously the compliance of the company. If you've been around a while and you can produce your last 5 survey reports and they're all deficiency free, that's great. But on the other hand, if you had one that was you had a couple of minor dings, that's not the end of the world. But they're going to ask you, the buyers are going to ask you for a lot of information, reams, volumes of information, and you're going to need to have all that at the ready. One of the things that delays these deals is when the buyer presents their 5 pages due diligence list, and it takes our clients, a month and a half to pull that together. So getting everything ready, getting it organized, feeling good about where you are and as a company, and that you are indeed ready to pull the trigger and sell it. It's not an easy process. To answer your question, Rich, what we will do is help you organize all that data on the front end. We will compile your financials. We're not going to change anything within your financials. We're just going to lay them out so that they make sense to somebody looking at them. We'll put them side by side year over year so that it's easy to compare the numbers. We'll help you identify logical add backs so that you can maximize the sale price of your company. And we'll also host, needless to say, we'll take you into market. We'll put together a full profile on your company, which accurately describes who you are, what you do, what your strong points are, where you're located, a little bit about your office space, your employees. We're not trying to get carried away with that profile, but we do want to give the buyers a accurate depiction of who you are and what you do. We'll then present you to different buyers. We'll organize calls and meetings. When you get under LOI, we'll help you to negotiate that out so that it's most favorable to you. Then once we're under LOI, we will host a data room for you. That's an important part of this because I've had more than a few deals that we got under LOI, but they didn't close. At that point, the seller has already produced volumes of information. Well, we can shut access off to that critical information to new lookers, but then turn it back on to a new buyer once we have it back under LOI. And that's important because that way the seller doesn't have to recreate the wheel and go grab all that information again. It's already there. We're involved in this throughout the process. When trouble pops its head up and we've got an issue to deal with, we'll be right there. We'll be on the front lines fighting for our clients and their well-being, and we'll speak openly and honestly to our clients about what's going on and how the process is going. There are certain benchmarks you have to clear, such as clinical due diligence, financial due diligence, legal due diligence. As each one of those is pushed to the rearview mirror, we'll keep you updated on our status. And at any given time, I'd say any one of us doing what we do can give you a pretty accurate statement of how the process is going and how it's looking in regards to closing. And most importantly, these processes can drag. I view one of our main roles is keeping the process moving forward. I've had these deals for one reason or another take multiple years. I don't want to scare anybody, but that's when the problems occur, or a company goes under audit from the government, something like that, and everybody just has to tap the brakes and step away. It happens. But in a normal deal process, our goal is to keep everything moving, because a deal that lingers and doesn't close for long periods of time is not good for anybody. It's not good for the buyer, and it's not good for the seller. So our job is to help you organize it, to communicate with the buyer, and to get it to closing as quickly and efficiently as possible.
Right. And Joe, would you agree that's, best case, it's 90 to 120 days. And it should fit in that time frame unless something pops up. That would be, from looking at all of our transactions, and some do run longer. We have about 2 minutes left, Joe. So any other comments, or, so our role, obviously we would encourage anybody thinking about this process to use us or to use someone like us as that M&A advisor, general business advisor throughout the process. We do not act as your lawyer. We do not act as your accountant, although we have lawyers and accountants that work with us and for us. And we're here to help advise on what's customary in the business world under M&A activities. But and there's always new topics, right? And we talked about before we got on this call, there's tax considerations with capital gains changing this year. There's some complications sometimes with working capital. I don't know if you want to address that, but working capital is an asset of the company. And it's the cash that keeps the business going. Most buyers will want some level of working capital left in the business. That's usually a point that sellers have a hard time getting their arms around. That's the AR. Some of that has to stay in the business to keep the cash flow flowing. Any other topics, Joe, while we got, I'll say, another minute or so, and you can give your final comments?
No, the only thing I will do is circle back to what you said a moment ago in regards to Rich, you're an attorney. We've got other attorneys within the firm. The reason we can't do that is because, and this is an important thing to state to potential sellers, we don't get paid unless a deal gets done. And the reason we can't act as your attorney is because there's a conflict of interest there. The perception could be that Rich rubber stamps it just to get the deal done, acting as your attorney. And we obviously, that's something that we don't want to do. We want you to have an independent attorney that is 100% focused on you and your needs as your client. We will work with them, and we are also acting in your best interest. Having said that, we can look at something and say, this is not something you need to worry about, or just give high level comments, but we can't act as the deal attorney. But no, it's I'll just leave the viewers with this. I advise a lot of people, whether they're my client or not. I welcome calls to just walk through this process individually and answer any questions that anybody may have.
Okay. Thanks, Joe. Once again, Joe Lynch, Stone Ridge Partners. I'm Rich Tinsley, also Stone Ridge Partners. Thank you for tuning in, and we look forward to talking.